my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A temporary halt yesterday with a higher but bearish black crow. There was also an attempt at making day two in a two-day tweezer top pattern. All this happened because of the congestion between 103.38 to 103.69, consisting primarily of the January 2017 low at 103.38 and the December 2016 low at 103.49 that caused similar halts back in May and June this year. You could also, at a stretch, call yesterday a hanging man pattern. However, it all highlighted yet again the two core patterns here. You can see them singled out with the relevant trend lines in blue to help visualize what is going on. We have a September to date ascending triangle, currently at 98.40 to 99.54, and a September to date ascending wedge pattern, currently 98.40 to 101.68. Recently, both patterns had false breaks in both directions, which complicated things and compromised both patterns. However, both patterns have repaired themselves, and last Friday saw a clear break above the upper trend line of the ascending wedge pattern to complement the earlier clear break above the ascending triangle. Looking above, we have congestion between 103.38 to 103.69 detailed earlier, but we also have further bearish pressure from above from the declining long moving declining long moving average, currently at 104.18, entering the frame. So with all this action, let's now look topside and see what are the opportunities for these patterns. I'd previously listed possible targets for the ascending triangle of a primary target X in the 102.65 area and a secondary harder to reach target X1 in the 103.65 area. And for the ascending wedge pattern, a primary target X2 in the 105.35 area and a secondary harder to reach target X3 in the 107.65 area. Well, the primary target X for the ascending triangle was reached on Friday, and the harder to reach secondary target was reached yesterday. We now look to see if targets X2 and X3 will now be achieved. And I have to say, there are some significant obstacles coming down to meet the market. Already mentioned the long moving average, so the only thing left to discuss is the January to May 2021 bearish Andrews pitchfork. This pattern had been previously broken on the downside as recently as October. The question now is whether the market will still find utility in the upper time at the moment. The market is between the middle time below, currently at 101.37, and the rapidly descending upper time, currently at 105.08. So far today, we're a slightly lower open, but a push up through the overhead resistance between 103.38 and 103.69, and on towards testing the next resistance, the declining long moving average, currently at 104.18. Pushing up through this, and now looking at the upper time above, and the February and March 2017 low at 104.92. Cable, aka sterling against the US dollar. A reactionary bearish harami yesterday as the market got a touch of the shivers from trying to push up through the upper trend line, currently 117.78, of the recent ascending triangle. Overall, yesterday was a third consecutive close over the upper flat trend line, currently 115.05, as well as the declining medium moving average, currently at 116.46, of the recent ascending triangle, and a close back just below the upper trend line, currently 117.78, of the recent ascending wedge pattern. Much as in euro, there are two core patterns here. I have highlighted the relevant trend lines in blue to help visualize what is going on. We have a late September to date ascending triangle, currently 113.81 to 115.05, and also a September to date ascending wedge pattern, currently at 113.81 and to 117.78. Both patterns had been previously compromised and both had repaired themselves. Now, late last week, there was a break higher over the flat trend line of the ascending triangle, giving possible targets for this pattern on the upside of the primary target X in the 120.20 area and a secondary harder to reach target X1 in the 122.5 area. We've only had the one close over the ascending pattern as yet, but I will keep a close eye on that this week. In the end, prices had earlier been held down by the lesser Fibonacci line at 118.59. Interestingly, we don't have that much resistance topside past this lesser Fibonacci level until the May 2020 low at 120.73. So far today, well, a reactionary move back up today, looking like a bullish engulfing pattern right now. that has punched up through the upper trend line of the ascending wedge pattern. However, it has once again been capped by the lesser Fibonacci line at 118.59, but it is pushing up through this pattern right now. Euro sterling. A second bullish white soldier yesterday. There was a follow-on to the previous session's immediate countering bullish army. This all counteracts the earlier reactionary bearish engulfing pattern. The base of the support was the rising short medium moving average, currently 87.24, along with the nearby April 21 high at 87.19. I'm reminded that last week the market previously faltered ahead of testing the 50% Fibonacci line of the March 2020 to March 22 move at 88.51, which I suspect may have happened again yesterday. Now further down, it is worth remembering we have the breached but still repaired lower time, currently at 86.86, of the bullish April to August Andrews pitchfork. Now so far today, a slightly lower open and dip before moving back up over yesterday's close, though not as far as yesterday's high. Seemingly further exploration without much enthusiasm, and looking like an indecisive doji cross right now. US dollar against the Indian rupee. A bullish opening white Mariposa yesterday as the market followed tradition with a bullish reversal rather than the data. The base of action was, unsurprisingly, the rising medium moving average, currently at 80.5, with the market punching up through the next resistance, that's the recent 50% Fibonacci line at 81.13, only to halt at the next resistance beyond that, the rising short medium moving average, currently 81.31, and close just below the 50% Fibonacci line. I now need to discuss the larger scenario which I'd previously mentioned in my commentaries. So I'd highlight how we have a September to early November ascending expanding wedge pattern. Late 2 weeks ago, prices pushed down through the lower trend line, currently 83.40, and the move lower since then has confirmed the pattern. Hence, we had a primary target X in the 18.90 zone and a secondary harder to reach target X1 in the 80.28 zone. Last Thursday, the market reached the primary target, but we've since seen the market being shy of testing the rising medium moving average below, currently at 80.5. Beyond the medium moving average, we have a gap dating from September between 80.06 and 80.18, which is significant, and then the August to date uptrend currently at 79.93. I should mention that this uptrend is part of a July to September ascending triangle pattern, which was successful, but which has left its upper trend line as currently at 80.02 in there as well. So far today, initial follow-on higher to yesterday's pattern that punched down through the 50% Fibonacci line and the short medium moving average, but has since punched up and down through the 50% Fibonacci line and short medium moving average, but has since dipped back down to what looks right now like an indecisive doji cross, with perhaps aspirations to be a gravestone doji, I think. US dollar against the Brazilian real. An unusual dichotomy yesterday. An indecisive spinning top that was also a bullish harami, if only just. As opposed to the previous session, which was an indecisive spinning top that was also a bearish harami, if only just. All this shows now how not only there's intraday indecision, but interday indecision as well, after the earlier huge bullish opening long white Mariposa, which in its turn was a more than adequate follow-on to the even earlier bullish engulfing pattern. All this action pointed out one clear feature. The overhead breached upper time, currently at 536.93, of the July to late August bearish shift pitchfork, still has a significant influence in capping the market, especially on the closing basis. Interestingly, the 50% Fibonacci line below of the May 2020 to April 22 move at 527.37 does not look that good a support, though the other slightly lower 50% Fibonacci line at 522.76 of the March 2021 to April 22 move does look a better support. I suspect this may be due to the conglomeration of moving averages that are nearby it, specifically the short moving average, currently at 523.02, short medium moving average, currently 523.40, and the medium moving average, currently 524.16. Additionally, I am still mindful of how the market last week almost set up for a possible monthly key reversal. I will still keep that in mind. US dollar against the Mexican peso. A counter to the counter bearish dark cloud cover pattern yesterday. This after the previous session's immediate countering bullish harami, if only just, and earlier very large bearish engulfing pattern. This current move lower all relates to the previously highlighted crossover combination of the broken upper time currently at 1961.22 of the March to July bearish Andrews pitchfork and the middle time currently 1975.89 of the still intact bearish shift pitchfork for the same move. The latest casualty had been the May 2022 low at 1940.70, which was support, became resistance, then support again, and is now resistance again. Meanwhile, the top also saw resistance from the pierced but still influential 2021 low at 1953.63. So far today, a slightly higher open, but then a turnaround to move lower with now the second lowest low since, well, March 2020. Thank you for listening. This short virtual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.